guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Okay, welcome guys. Thanks for joining Stocks Never Trading. My name is Ron, my partner is Dave. Thank you for joining guys this week in our late night Tokyo sessions. We've been having a blast lately this entire week. It's been fun. Yesterday was a lot of fun. We had the Trump's speech to the nation. We had it in the background. We got into this gold trade, if you guys remember, and then there was, when Trump was about to come out, there was a lot of clapping going on, and we were clapping our way right to the resistance box right up here, where we netted approximately 50 pips if you held that trade, or if you, I scaled out 80% right up there and left 20% running, and then as soon as we ended the call, then you can see it hit our red zone exactly where we wanted it, our daily point of interest up here at 29.14.15. And if you don't do anything up there, unfortunately the market will decide for you. It could continue to move up, but it came right back down and hit my 20% break even runner at sub. So these are those woulda, shoulda, couldas. You know, what if it kept running? What if it did this? What if it did that? And I've always had those what ifs in my head for years and years and years, and I always wanted more. And then this move would always happen to me, and then I would get stopped out at break even or stop loss, and then I'd have to review the trade and say, wait a minute, I left all of this profit because I didn't do anything at my established zone. So then I got to start to learn some discipline here and start to do something at these levels. You don't even have to close the entire trade. I showed you guys yesterday how you can close a certain percentage in partials, okay? And guys, so for tonight, what we're going to do, we got a lot to do tonight. It's going to be a busy night. First thing is we're going to do a Wednesday webinar. We're going to learn all about what is the US dollar Canadian dollar pair. We'll talk a little bit about it. And then after that, once we're done that, we're going to come back in the charts. I'm going to leave the gold analysis that we have. We're going to follow where it's trading at right now. Maybe we can modify, maybe we can change up a few things. And we're going to watch gold, how it goes into the futures market open up in 1 hour. So that's 8 p.m. We'll watch it for 15, 20 minutes, 30 minutes maximum, 8:30. And then we'll call it a night. And then we'll get ready for NFP Friday tomorrow. We posted a blog on it, and there was also a trade idea that was also posted on our blogs, guys. So if you haven't, it's a free blog. I suggest you guys utilize it, and we do put some valuable information, kind of things that are happening throughout the week to kind of prepare you guys. So maybe read up about NFP. If you guys don't know what it is, maybe you'll learn something there. And then we'll watch gold as it moves into the futures market. Okay, so I want to get kind of this done in about 45, 50 minutes, maybe not even that, maybe 30 minutes, and then we get right into the charts. But we'll see how it goes. I want to thank everyone for joining. Welcome, guys, everyone on Zoom. I appreciate you guys. Christoph, welcome. Sergio, welcome. Good evening. Thank you. Q, welcome. Welcome, guys. And you guys on YouTube, I appreciate all of you guys as well. Welcome. Mohammed, welcome. Good morning. Welcome, brother. Ahmed, welcome. Thank you for joining. Sarakov, welcome, guys. My apologies. Tomorrow's Thursday. NFP is Friday. My apologies. I thought it was Thursday. I thought it was Thursday for a second there. My apologies. Prepare. Then we have another day to prepare for it. So it's Friday morning. I'm so sorry about that. I completely forgot what day it was. Okay. It is Wednesday tonight. Wednesday webinar. Okay, so let's get started. I gotta get ready and hit the record. I want you guys to think about the US Canadian dollar pair. Have you guys traded this thing? Have you guys ever analyzed this thing? It's called the dollar loonie. We'll see what we can learn here today. Okay, and Dave and I, we live in Canada, okay, so we're familiar with the Canadian dollar, and our neighbor is America, so we are also familiar with the US dollar, and we can trade these currencies amongst ourselves. We can invest in them. We can do whatever we want. Okay, so let me hit the record and let's get started, guys. Let's have some fun. Let's learn something. And if you have any questions, please feel free to ask any questions.
Recording in progress.
Okay, good evening. Thank you guys for joining Stock Sniper Trading. My name is Ron, my partner is Dave, and this is our weekly webinar that we do on Wednesdays. And we want you guys learning as well as earning in the markets with us at SST. So tonight what we're going to do is we're going to talk about Forex. We're going to talk about a Forex pair. We're going to talk about one of the major Forex pairs around the world. And it's the US dollar versus the Canadian dollar. And its ticker is USDCAD. Some of you guys have traded this. Some of you guys maybe have not traded it. You can do everything that you normally do. You can invest in this and hold for years. I'll talk about a little bit about that, what I did with that back in the day, and looking for some opportunities again coming up. And you can swing trade this on the daily, like for multiple days. If you see something developing on the week, this is a nice maybe pair to swing trade. You can also intraday trade this and scalp this. It's a very technical pair. You have two of the major currencies paired up against each other. So let's talk a little bit about it, okay? Okay, so what we're going to do is we're going to explain what the USD versus Canadian dollar is. So the USD CAD currency pair represents the exchange rate between the United States dollar and the Canadian dollar. So very, very simple, okay? It's just we have two currencies and they can be traded amongst themselves. Right now you probably are hearing that there's a lot going on between America and Canada in the news. Today Trump was saying that they were going to put the tariffs in, but he's delayed it. He had a meeting with Trudeau today and they're delaying the automotive tariffs for another 30 days, for another month, because that was supposed to go into effect immediately. I guess they had a conference, they had a meeting, and they're going to delay it for 1 month. So that will affect the US dollar and the Canadian dollar and the price between it. So this is happening real time in real life right now. So that's why I want us to get understand what this currency pair is. So understanding this pair involves analyzing various factors that influence its value. The economic relationship between the two countries. As you can see right now, there is a little bit of tension between these two countries, and the market dynamics affecting it. So what we'll do is we'll explore this a little more and talk about it, okay? So the overview of the US dollar, Canadian dollar. Number one, the currency pair. Let's talk about how it's composed, its composition. You have the US dollar. You guys should be very familiar with this. The USD is the United States dollar. It is the official currency of the United States. The USD is the world's primary reserve currency. So let me repeat that in case you didn't hear me. The US dollar is the world's primary reserve currency. Okay, so make sure you know this. I bet you 99.9% of you guys all know that, but if you didn't, now you learned something new. And why are we so intrigued about the US dollar? Because it plays a significant role in global finance. And then we have the Canadian dollar. And I'm Canadian, Dave is Canadian, so we talk about the Canadian dollar, okay? We spend, when we're buying things, we're transacting in the Canadian dollar. It's also known as the loonie. If you guys know your birds, a loon. Some people say, what is it? Is it a duck? Is it a swan? It's a loon. Just Google it and check it out. That's what the loonie is. The Canadian dollar is also known as the loonie. So maybe that's something new to you guys. You didn't know that. I told you we're going to learn something new today. And because of the image of a common loon on the $1 coin, okay? And we have a $1 coin, and the US has a $1 bill, so it's a completely different. Okay, we got loonies, it's tokens, it's coins that we have in our pocket, and in the US they have actual $1 bills. So big difference between the two. Let's talk about how it's quote format, and this is for very common with any other currency pair that you guys trade. Some of you guys are trading GBP USD, Euro USD, USD JPY. We have the USD CAD pair. So the first currency, the US dollar, the USD, is the base currency. Everything you're trading, whatever's the first currency, that is always going to be your base currency. And the second currency beside it, in this situation, the Canadian dollar, the CAD, is the quote currency. So you're always going to have a base currency and a quote currency. It doesn't matter what you're trading. There's always going to be a base and a quote. The exchange rate indicates how many Canadian dollars are needed to purchase one United States dollar, okay? So that's the exchange rate. How many Canadian dollars are needed to purchase one United States dollar, okay? So what are factors influencing this pair, this amazing USD CAD pair? Number one, we have economic indicators. We have GDP growth, gross domestic product. So differences in economic growth rates between the US and the United States and Canada can impact the strength of the US dollar, the USD Canadian pair. I'm going to start to call it, like, if you guys hear me saying UCAD, that's kind of like an abbreviation of saying the US dollar CAD. Some traders, investors say UCAD. So I just want to get you guys familiar with the language. Maybe sometimes you might hear myself or Dave refer it to UCAD, just so you know what we're talking about. So stronger growth in one country typically leads to a stronger currency. We also look at employment data, employment figures. This Friday, we have US non-farm payroll. And we did a blog, guys. If you guys want to check out our blog on our website, stocksnipertrading.com, go to more, and then a free blog is available. So you can start to get a little understanding of how this is going to move into Friday morning into unemployment figures, and it will directly impact this pair that we're talking about. So employment data, employment figures including unemployment rates and job creation statistics are crucial indicators. That's why the NFP is a high impact red folder with lots of volatility, because those job numbers will affect the US dollar, which in fact will affect the Canadian dollar. For example, a drop in US unemployment may strengthen the US dollar against the Canadian dollar. So maybe we may see that on Friday morning when we have the non-farm payroll numbers released. So maybe and also like a drop in unemployment when we have the unemployment claims coming out week over week. If we see a drop in US unemployment, that means fewer individuals are unemployed. So that may strengthen the US dollar against the Canadian dollar. Number two, we have interest rates. A lot of you guys now are following the markets. You guys are following FOMC when Mr. Powell comes out and talks about the interest rates, the federal funds rate, all of these things. So how do all of these events tie together? Interest rates will definitely impact this currency pair or any currency pair that you're trading, because that country has its own interest rates. So interest rates are set by the US Federal Reserve, the Fed, and the Bank of Canada is BOC. So number one, you have the Federal Reserve, that's where Mr. Powell is, and then you also have the BOC, which is the Bank of Canada. So these have significant impacts on the exchange rate. Higher interest rates in the United States may attract foreign investment, boosting demand for the US dollar. Okay, so, and then commodity prices. So some of you guys are trading gold, some of you guys are trading silver, some of you guys are trading crude oil, and some of you guys are trading other various commodities. So this will affect commodity prices. Canada is a major exporter of natural resources. Believe it or not, us over here in Canada, we are a major exporter of natural resources, particularly crude oil. Okay, if you guys are familiar with the province of Alberta, Alberta has the oil fields, the oil sands out there. So we are we sell crude oil to the US. So Canada is a major exporter of natural resources, crude oil to be specific. Therefore, fluctuations in oil prices can influence the Canadian dollar significantly. For instance, rising oil prices may strengthen the Canadian dollar, causing the USD-CAD exchange rate to fall. We've seen this during February of 2022. We've seen a little bit of this when there was lots of demand globally for crude oil, when it hit those highs of $130 a barrel, when the Russia-Ukraine tension started in 2022 of February, we saw crude oil go from $90 a barrel to $100 to $110 to $120 to $130. We were trading it live. We saw how it impacted the USD Canadian dollar pair. So it really strengthened the Canadian dollar because of that crude oil, because a certain portion of crude oil is backed by Canadian dollar reserves. So we also have trade relations. Okay, so the US and Canada are each other's largest trading partners. Okay, we are neighbors and we are each other's largest trading partners until now. Now there's a little bit of tension going on with the tariffs around, but traditionally we are our number one importer exporter between us. We are neighbors here and we do constant trade with a high volume of imports and exports. Trade policies, tariffs, and trade agreements like NAFTA. NAFTA is the North American Free Trade Agreement, and its successor, the USMCA, can impact currency values. So for years and years and years, we've always had the NAFTA agreement, North American Free Trade Agreement, where we're welcome to trade amongst ourselves with no threat of tariffs. So as of late, with Donald Trump and his policies, he's implementing tariffs, where any products going in will be subject to a tariff. So this will definitely impact the USD Canadian dollar currency pair. We have market sentiment. Investor sentiment often influenced by global market conditions and the geopolitical events can also affect the USD Canadian pair. For example, during times of global uncertainty, the US dollar is often considered a safe haven, leading to its appreciation. So this has been traditionally how it's been. Anytime there's global uncertainty around the world, nations, institutions, investors, hedge funds, retailers, anybody tend to flock to the US dollar and start to purchase it in times of uncertainty because, like I stated earlier, the US dollar is the global currency reserve around the world. But there has been a little bit move. There's been pivots as of late in the last 10, 15, 20 years. There has been nations that have been pivoting away from the US dollar and not seeing it as the global Federal Reserve. If you guys understand BRICS nations, it started with Brazil, Russia, India, China, South Africa, and Saudi Arabia. They could be kind of diverging away from the common US dollar as a global reserve and maybe start to make their own, hedge against the US dollar. So that's happening right now around the world. If you do some research, you can read about it, and it's happening right now as I'm speaking. So there's more and more and more if you want to take your education further and start to learn more and more about currency and fiat currency and how it plays a major role around the world. Okay, so the investor sentiment, often influenced by global market conditions and geopolitical events, can also affect the US dollar. For example, during times of global uncertainty, the US dollar is often considered safe haven. Okay, so let's just continue. How is this US dollar, Canadian dollar traded? So number one, we have the Forex market, which you guys are very, very, very familiar with. So we have UCAD is traded in the foreign exchange, the Forex market, which is the largest financial market in the world. This trading occurs 24 hours a day, 5 days a week, and involves various participants including banks, financial institutions, corporations, and retail traders. So you and I are retail traders. We have the freedom to trade with the Forex markets. Corporations do too. Financial institutions, including our big banks, are welcome to trade as well. We have buying and selling. So when a trader believes that the US dollar will strengthen against the Canadian dollar, they may buy USDCAD. Conversely, if they believe that the Canadian dollar will strengthen against the US dollar, they may sell the US dollar Canadian dollar. Does anyone know right now what the USD Canadian dollar is trading at right now? Anyone want to give me, you can give me exact what it's trading at right now, or a ballpark figure. What if I wanted to buy or sell right now, what is it trading at currently? And while you guys answer that, I'm going to talk about leverage and margin. Traders often use leverage to increase their exposure in the Forex market. While this can amplify profits, it can also increase the risk of losses. So as you guys know, when you're trading Forex, you have, with most Forex brokers, that you can adjust how much leverage you want to trade. You can trade 1 to 30, you can trade 1 to 50 times leverage, 1 to 100 times, 1 to 200, some are up to 1 to 500, and I've even seen today brokers that offer 1 to 1,000 leverage. That is like astronomical leverage. If you do really well with that leverage, you can amplify your profits dramatically. And if you, sorry guys, just 1 second, Mimosa. And then if you guys, sorry, where was I here? Traders often use leverage to increase their exposure in the Forex market. While they can amplify profits, it can also increase the risk of losses. So talking about losses, if you increase your leverage in the Forex market and you're on the wrong opposing side, you could get liquidated very fast and lose that position rather quickly. Okay, so you have to use leverage and proper risk management with the utmost respect when you are trading with leverage. Okay, so continuing with how the US dollar is, USD Canadian dollar is traded. We have technical analysis. So traders often analyze historical price charts and indicators to predict future movements in the USD CAD exchange rate. Common techniques including trend lines. So the trend is your friend. Try and identify the trend. Moving averages. Some of you guys are familiar with exponential moving averages and your simple moving averages. Some of you guys use a 9, a 21, a 50, a 100, a 200. I've seen some of you guys using a 600-day moving average. So whatever you feel comfortable using, just make sure you backtest and optimize it, and double check that everything is, excuse me, sorry guys, I'm just getting a little distracted. My daughter has the phone, the game on. Okay, so common techniques include trend lines, moving averages, and support and resistance lines. So make sure we identify with a top-down analysis your supporting areas, your resistance areas. Maybe you can identify some supply, some demand, some zones in the market, and continuing to do your analysis on whichever time frame you trade on. So, and then number 2, we have fundamental analysis. This analysis focuses on economic data releases, interest rate changes, and geopolitical events. Reports on employment, inflation, and trade balances are vital in forming expectations about market movements. Okay. So we have to, just like with anything, do your technical analysis, also fundamentals, and maybe it can help get you prepared for your trade opportunity. So current context and trends. Analyzing the current state of the UCAD would involve looking at recent economic data from both countries, central bank policies, and prevailing global market conditions. For any real-time analysis, guys, market news and data, traders would consult with financial news websites such as Bloomberg. You can use something just like Yahoo Finance, Market Watch, anything that can give you any financial information on a daily basis. You can use your economic calendars, such as earnings whispers, to learn about what earnings are coming up. You can use Forex Factory to learn about what news is going to come out during the day. Is it low impact, medium impact, high impact news? Like this Friday, we have NFP, which is a red folder high impact news, and it will directly affect this pair that we're talking about. And Forex brokers to understand ongoing dynamics affecting the USD Canadian pair. So in conclusion, guys, and don't leave me. The night is just getting started. We'll look at the charts as well. So just don't leave, guys. We're getting started. Just want to give you a little brief introduction to the USD Canadian dollar pair. So the UCAD currency pair reflects a complex interplay of economic, political, and market forces. It is essential for investors and traders to stay informed about economic indicators, geopolitical events. We're having some events right now, day-to-day events with these two countries, regarding tariffs, regarding trade, with natural resources and all kinds of things, and just your everyday supplies that are in your grocery store. So we're also we also export vegetables to the U.S. So that will affect the grocery stores. It will affect everything. It's not just crude oil. It will affect everything. So this will be in the news every day, guys. And it was a big on the automotive industry, but Trump today backpedaled now and delayed it for another 30 days because he was going to put tariffs on all automotive 25%. So I'm not going to give any personal opinions right now what I think about it, but I just follow the news and I follow how the markets move and I follow the volume and I follow the candlesticks. There's not much more I can do. And market sentiment to understand and navigate this currency pair effectively. The relationship between the two economies, along with the influence of global commodity prices and trade policies, makes USDCAD an important pair in the Forex markets. Okay, guys, so right now what I want to do is, while I got you guys on here, we're going to go to a chart. This is US dollar, Canadian dollar. You can see I'm on the daily, but I just want to take us to the monthly just to give us a historical look at this pair. I'm using Owanda and it starts at 2002 over here. Yes, we can look at how it was trading in the 90s and the 80s, but this is good start right here from 2000. So you can see where we were trading at. It was at one point right now. Did someone answer my question? How much is USD? I see 1.43 Barry. I see 1.43 Mohammed. You guys are correct, okay? And you didn't tell me exactly to the pipette because we understand what you're saying. 143 is it? It's actually 1.43472 right now, to be exact, okay? But you gave him a nice ballpark figure. Anyways, guys, so can we analyze something? Yeah, in 2002, I know, guys, last time I checked, you guys are like, Ron, it's 2025, but had we been doing this in 2002 and we stretched it into the future, we're still pending up there, okay? So since 2002, when it was trading just below 1.60, that nice psychological area. Remember, Ron was doing this when he was 7 years old. He started, and he's old now. You can see the gray in my beard. That I'm still waiting up here. Ron is still pending up here. We'll see what happens. Do we have a nice double bottom, triple bottom bounce somewhere? Yeah. What about in here? In 2015, there was some economic news in the markets. Right here in 2018, do you guys remember 2021? There was a pandemic in 2020, but good bottom was made on a higher time frame right there. So we got good demand whenever it drops down to 1.20, 1.21, 22. Okay, we're nowhere near that right now, but look at these wicks. Like, look at that wick breakout right here in 2016. Look at that wick right there. This was when COVID started. It was March of 2020. Okay, was that big breakout, and look, tweezer top highs on the monthly, guys. Okay, when we're scalping, I say, guys, candlesticks all have the same characteristics. It doesn't matter time and date, just the candlesticks. Look it up there. When it hit those highs, like those wicks are very, very equal. Like 1.46785. Like look, that right there, that high, boom, they slammed it down. That high, they slammed it down. Do we have like bodies of volume? Yes, we do. So let me analyze these bodies right here, like right in this location. Like those bodies, I would have started it and then seen how maybe now, like I can alter, I can modify my box now. I see what it did in 2020. Continuing to bring this across, you can see how it was resistance here, red, got rejected back down, red, traded into it, red back down. I can see the higher low double bottom right there if I really want to get into charting here. And then we do have closing volume above. We closed above for the first time in December of 2024. Now, with volume above, I make this zone demand and stretch it into the future. Okay, so if we do pull back down into here, this might be a good opportunity to look for buys. If the sellers bring it back below here and close this, we could be dropping where this would be my next point of interest, right here. That's a point of control. See how it came down, held, came back up, neckline, came back down, double bottom, move, higher low right there, and we broke out of here. So we're trading with volume. Now we've filled up these wicks. We could continue to break out of here. I'm targeting, I want to see what will happen if it gets to 1.50 exactly. You know that nice when Ron talks always about psychological numbers, there's no more psychological number than 1.50. Okay, so anywhere if it can get up to here, that's what I really want to watch what the market will do. And up there could be an order block of supply waiting to get triggered. Okay, it's all the way up there. We're still down, we're pushing down. These are monthly candles, mind you guys. These are monthly. I just want to show you how this thing has been moving. Do we have historical lows? Yeah, 2007 there was a financial crisis there when I kind of lost my job there when I was working. So there was a nice double bottom, and like telling you some stories about myself personally, and I kind of advised my father. So I'm my father's financial advisor. Believe it or not, he believes in his son over the banks. So I told him when I was young over here, Dad, why don't we kind of review your portfolio? Look at what the US dollar, Canadian dollar. It's you know what parity means? Parity means dollar for dollar. This was below. Look, it was trading at, it went down, that wick down to 90 cents. Here's 90 cents, 95, 94. So this is when I had a little conversation with my father, said, why don't you purchase some American dollars at this time? And he said, are you crazy? What are you talking about? This and that. Long story short, when it started to move up to the 130s in here in 2016, he looked at his portfolio and said, do you want to start to close the position? Would you like to take partials? Would you like to take out 80% and leave the rest running? Dad, it's your choice, but make sure let's, eat along the way. So my father was very pleased, and he's asking me right now, Ron, is there another opportunity in the markets that we can do? And I said, let's just hold up and see what happens. If it can come up to 150, 160, I'll give you we'll talk, we'll have a coffee and we'll talk up here. Will it ever come back down to these levels where we can buy again? I don't know. So again, that was just some conversation with myself and my dad as we have conversations together with you and I. Okay, so that's how it's moving on the monthly. You can bring it down now to the weekly. You can really see how it's been moving. So you can see how it broke through. Look at the weekly. Like there's a nice double bottom right there. We should have broke in March of 2023. It didn't. Came back down. Holding good point of control. We came back up. Again, it should have, woulda, shoulda, coulda. It should have broke in October 23. Bullish. No, it didn't. There's a lot of supply up there holding it down. Again, we came down here. Point of control holding. We should have sold below there, but the market is holding because there's good demand. We continue to drive back up. Again, multiple times you can see August of 2024 could not break. Making higher lows now. Look at how it's diverging away from from the demand zones. Now it's creating higher low support up here. And again, you got a double bottom on the weekly. Then we start to penetrate through here. There's some closing volume. There's a nice pullback and continuing to close above. Had you that body that closed, if you waited for 50% pullback right there, you could have got in and you made some money along the way. So this is when we had this major candle. This was February of 2025. This all had to do with Trump and everything and what's going on right now. So it was kind of like a big shock to the market. We pushed back down. This is when he was announcing tariffs and all of that. You can see how it really was like an unusual bar up there. That's with major news, guys. And so we came back up on the weekly. You can see we're 50% still below this black bar right here. So it could still push down. Maybe we create a higher low and we come back up. So that's on the weekly. If you want to look for swing positions, you can look for swing positions, guys. And if you want to calculate the pips on the weekly, you can definitely do that, guys. If you want to look from one zone to the next, like from this purple line to the next zone, you can see how we're talking almost 700 pips, not 70, but 700. Okay, so this is where you're holding positions longer duration because we're on the weekly. Daily, we're looking now how it's been moving. Now I can tell exactly what day that unusual candle was. It was Monday, February the 3rd. Some news. If I go now look back what happened news-wise, I'm kind of like back testing, going back. Well, if I put in, go search what happened February 3 in the markets, but US dollar and Canadian dollar, something will come up. And then I'll piece it together. I'll be like, oh, I remember that news. Okay, I understand what happened now. But we're kind of retracing right back up. We're still kind of below it. I would do my daily analysis. I can see some consolidation for multiple days. Then they finally broke it out and came. So right now we're still consolidating in the range on the daily. If you want to swing trade on the 4 hours, those are your 4 hours. If you want to scalp this thing on the 5 minutes, I guarantee you there was some good scalps today to be taken. What time do you want to look at? Maybe you want to look like a Wall Street market open. You want to look at 8:30 when there's news in the markets. So just looking here, 8 a.m. big news. Like look at the big move come back down. You can go into a 9:30 is like right over here. You can see when they dropped it down 10, pinned it, started to come back up. You could look for buys, scalping, whatever you like. Okay, so that's our US dollar Canadian dollar pair. Let me ask questions. Do any of you guys trade this thing currently right now? Is this on your watch list? Do you guys frequently trade this, or do you guys stay away from this? I have been known to scalp this and trade it and everything like that. I'm more of a swing trader investor with this currency pair. I like to look for long opportunities when there's great times to buy this thing. If it's ever at parity, below parity, that's an optimal time to look for buys. Also to sell it. When do I want to look to sell it? Again, I want to wait to see if this thing can climb up to 1.50. We know that the highs up there are 1.60. We'll see up there. Okay, guys, so number one, I hope you guys learned something new today with the USD Canadian pair. I hope you guys enjoyed our webinar, and stick with us right now because it's 7:35. We're going to go to gold. We're going to do some analysis on gold, and we'll watch it into going into futures market in the next 25 minutes, okay? So thank you, guys. I appreciate your time. Appreciate you guys listening.
Recording stopped.
Okay, how's everyone doing? Let me just grab something to drink here. So thank you guys for putting up with me. Hope you guys learned something. Maybe you did, maybe you didn't. But now I know what you guys are all here for. You guys are here to look at gold. So do you guys remember yesterday's session? Okay. Let's just look back test. Here's 8 p.m. So this was when the futures market started. We were below this resistance area. I'm going to keep the same zones and move it right into today's trading. Okay, so I hope everyone pays attention because I'm not going to repeat this. I'm not doing a fresh top-down analysis. I'm going to bring us from exactly where we were trading yesterday and then how it traded throughout the day and then where we're at right now. Okay, so if you're going to pay attention, if you didn't pay attention to that webinar, now it's time to pay attention. Okay, but I hope you did pay attention to that webinar because you're going to hear a lot about USA and Canada in the news and almost every other country in the world. But If I have any words for Mr. Donald Trump, if he's listening, Donnie, we're your friends here in Canada. We are your neighbors. We are your trading partner. Okay? We like free trade. Don't be that guy that comes in here and screws something good we got going over here for multiple years. Okay? Let free trade happen. It's good for your country. It's good for our country. Everybody's happy. This tariff thing, you're going to upset few people. That's for Mr. Donald Trump. If you're listening, if you're out there, Donnie, thank you for the pump yesterday. We appreciate that. I didn't appreciate the little dip when you came out, but I understand what was going on, how it came and grabbed some liquidity. But that's why we are smart. We put our stop loss just below the zone here. Okay. And we did proper risk management so we wouldn't get liquidated. We didn't risk too much, and the trade played out, okay, without a little bit of a pullback. So timing of the trade is essential too. But let's talk about it because it's 7:38. Ron's got to get cooking here. Okay, so 8 p.m. started. Bearish, and then you see what they did. They just dropped it. 810 dropped it all the way down. Where did we come down to? We came down to 2,904. That's where our yellow line is. That's a daily point of interest. Okay, and then you see how we bounced out of there. Really nice. Next candle, kind of right through there. So they grabbed all that demand, nice bullish engulfing candle, pullback held. We came back up here. And in this candle, when it opened, this was 8:30. Okay, so this was 30 minutes prior to Trump coming out and doing his speech. This candle came down. And then when it came right here, this is when I took my buy. I took my buy right here. When it broke like 50% of this green candle, I bought. Yes, if I wanted a quick scalp, it went directly right into profit for, let's measure it, for 20 pips. Okay, so I was directly when I bought it, where the range was 20 pips, but where I purchased it right there, it went up again 20 pips. So I could have pipped and dipped out of there and been happy with 20 pips, but that wasn't the call, like what we were doing on the call. We were watching how this thing would trade going into his announcement, and we were in I was in a trade because I was looking for it to start to break out right there, but it didn't happen. 8:30 came in, it pulled back down. Again, you see the consolidating, black, blue, black, and then there's the M, there's the double top, and then what time? 5 minutes before. Look at time and sales, 8:55. 5 minutes before Trump came out, look at what they did. I was in a buy position. They tried to liquidate me, take me out. I almost got taken out with this candle right here at 9. It came down, and you guys remember I had my stop loss right below this green zone, and I got saved. I even verbally said it by like 3 pips. I got saved, or else I would have been tapped out. And then thankfully the buyers stepped in that green zone and pushed it right back up, and then 9:05, we started hearing the clapping. We started hearing Mr. Trump come out, and look at how the gold responded. It came up, and we got our bar that closed above. Prior to there, we had those 2 tweezer top wicks and no volume. We got blue volume. Do you see what I did there? I put that 50% box on that blue candle, and naturally we came down right into it. We found our buyers, flipped the wick, closed near the high. It was a bullish pin bar, and we continued to drive into 9:15, and right in here, as it was coming up, this is when I said, guys, I'm verbally taking out 80% of the trade. I'm going to leave the rest with a break even, the 20% running. And now looking back at it, the woulda, shoulda, couldas, all of this, the analysis, had I not taken out anything up there, look at how it came back down and pushed right back down, and that one would have taken out my stop loss right there. That right there, if I continued to hold till 9:30, because I measured the move 50 pips, that was more than enough. I normally trade for 20, 30, but 50 is a gift. But there's sometimes you want 80, 100, 120. I want that too. But I respect these zones. That's why I put them on my charts. And I trade in between these things, okay? And then now let's just continue watching what happened. So after the call, 9:30, 10, it came. See how it broke below, but then didn't really close with volume below this green zone. So if you stretch that green zone, you can continue to stretch it into the future. That one What are more immediate blocks? This one, see how it held? Had I stretched that, see when it went up back above there, it pulled back. Look at where you can continue to buy off of, or if you're selling, maybe to close positions where the buyers are. It moved back up, continued, make higher highs. Then when did you bring this zone across? Right there. At 12:45 a.m. Eastern, just before 1 a.m. Eastern, it closed above. And if you change the box color to green now, when that body closed above, what would happen? Now you got your support demand area. Look at, then you got your liquidity grab, come down there and close back above. There's another liquidity grab. There's, like, if you really utilize this, guys, you could, and just continue stretching it into the future. Again, then I can start to see now what it did today. Like, this was London, double top. You can see there's the M. There's where it closed below, the drop right into this box. If I was shorting from there, 29.17 back down to there, there's 30 pips, filled the zone. You could, if you wanted more, obviously you want more, but you got to kind of respect these boxes, because you see where the buyers brought it right back up. You can sell and buy. Sometimes that's what I do when I'm scalping. I'm selling, grab my 20-30 pips, close the position, and I'm buying the next position. And then I go up 20-30 pips right up to the box. And in just 2 consecutive trades, you can, if you got a 50 pip daily goal, if you just watch how the zones are trading. Careful for fake outs, and try to the best of your ability if you can wait for candle bars to close. Again, just stretching this all the way, and then I can start to see how things traded. What was this big dip? 8:30. There was some 8:30 news. This is North American news. And then you see how news now can violate our zones. They were holding pretty steady. They were holding pretty good, but you throw some high impact news in the markets, and this is what you can have. Here's 8:30. Look at the drop down there, come back up, close there. There's liquidity, higher low, body close. That would be a nice bar to buy at 9:30. Look at the timing. Look at the move, guys. Like, do you see time and sales? They dropped it at 8:30. There's one bottom. Came back up. There's our neckline. Came back down. There's that wick. It didn't produce a double bottom. That's a higher low. There's our bullish ignited engulfing body. And then look at right there, 9:25, it closed above the neckline, and then 9:30 starts with a bullish ignited bar and just continuing to go back up all the way up there. Pull back, holding, continued. There's a double top right there, and then there's your drop. You could locate the support right there. There's 50% close. Like, you can now, hopefully your eyes are seeing how it reacts. And I haven't changed this yellow line, this yellow line, this yellow line. Those are always points of interest on the daily. You can see how the 5-minute body is traded in there, 11:30, and then right at noon, they dropped it. Time and sales. Where? At this daily point of interest at 29.28, 29.30 area, 29 right there. Again, let's see now. So let's stretch these zones. See where we're trading at these. Let me just get rid of these purple lines, because these were from the high and low of yesterday. I'll keep the yellow lines. This is where now I start to clean up. I don't take my major zones. So what I do is, again, this is going to be still a big green box here at 2,900. If it gets down there, if we come all the way back down, there's that low. If it breaks that low right there, 29.11, that's where the market could maybe take a little bit of a dip there. Gold could drop. Again, can I make some modifications to my zones? Yeah, now I see there's some volume there, volume there, volume there. Maybe let's see what I can do with these zones now. Let me see. Okay, and then stretch it across. So then I see impulse, 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 no volume close above. There was a fake candle that closed above. They brought it right back down. Then we got the, again, confirmation close, retest, continue to up there to those highs. So you can see at that daily point of interest, 29, 29, 29, 30 right there. We should have a red box going across. Okay, and I'm utilizing the same points of interest from yesterday, our call we did yesterday. Now what I'm doing is I'm either keeping the same zones I have or just modifying them. There was, a nice little break when right at the end of the day. Look at the end of the day time. That's 3:54 p.m. That was a little bit of a push right at the end of the day, and at to 29.20, 22.97, like a Walmart price. 3 cents off, rollback. And they continue to push it down, close below, double top up there, drop it a little more. So this is where we're trading between right now. This is right here. This is our support on the 5 minutes. It's 29.17 holding. We got a zone above us. We also have this daily point of interest right here. So again, with that green box, how I still have it, I bring it across. I see, now I see, does any volume, black volume close below there? No, I see a wick, a wick, a wick. Again, the body stayed above here, move back up. Let's move this zone now into the future. Okay, you see how it's located right at this yellow line. So if it comes back down here, let's see if this will break. Might be a wick just like these. Maybe it breaks and has black volume below here and continues pushing down. Maybe we come down here and we bounce off this. Maybe we break above this red zone, close above, retest it. Maybe we drive. But what we can do is we got 13 minutes to go into the futures. So I'm going to stick with the 5 minutes. I'm just going to get rid of some old stuff, just cleaning up the charts. Okay, how are we doing? Everyone okay with that? This was a quick little breakdown. Okay, I know it's not what we normally do here, but do you guys have any questions about anything? Any questions about the webinar? Any questions about this? Do you guys have any questions? And we're on the 5 minutes. Lily, can I teach you something about volume? Absolutely. Okay, so just a quick little lesson on volume. When we're looking at our bars, you're looking to identify big body candles with a lot of volume, because then you can easily identify where's about 50% of it, where's a little bit above, a little bit below. Plus it has a lot of volume. So those are what you kind of want to base your analysis off, and that's what you want to kind of trade. You do not want to trade like thin body candles with like these. You see these candles right here? See this one where it came up and look at how it closed with that thin volume. Very, very difficult to understand how that is trending, who's winning that. There's a lot of range, a lot of indecision. And then look at the next bar, came down. Like these two bars, what you can look for then is just the liquidity grabs. How high did they grab some liquidity? So they swept the liquidity at the high, they swept it at the low, and then we were just continuing to base off of these candles. You can start to analyze information off of these big body candles. This is where, like when the market starts to open up like this, where you get big body candles, that's what you want to base your analysis off. See how easy it is now to the eyes if we did this? Like, see these nice big body candles? Then they start to really just coil up in here. Blue, black, blue in here. And then this one closed with the authority below. So then there's your M, like your double top where, and also look where they make it. They make it at that daily point of interest, that yellow line. So that's where the 5 minute candles got exhausted. The second leg is the more powerful leg. Then you see how it closes right there below with the volume. See how it's kind of roughly 50% with the neckline. So this is where, again, I would be analyzing this a little bit above, a little bit below, make that a red zone, stretch it into the future. If we ever come back to pull back into this, sometimes it pulls back, then it drops. But in this situation, you can see that sometimes it doesn't always pull back. This candle turned blue, 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 and that, did it come and touch in here? No, just a lower high. But then as you see it push down, what time is it? Noon. Maybe if you get in a quick little scalp there and you scalp it down there. Again, measure the range of the volume of these candles. This is gold. You know, like if you take a couple bars, there's 25 pips. If you get down there, there's 40. If you hold it down there, there's 50. If you're going all the way down there, it's 80. You're done for the day. You basically hit a daily goal by being patient and letting the trade develop. Let it develop and make the best trading decision you can possibly make without over leveraging. But you see what I do? Look at how this zone might play out going forward tonight. See there's the neckline, the zone. What I do is I stretch it into the future. So if we break right here, see how it will naturally just trade right back up to 29.25, 29.26, and maybe if the sellers are there, they'll push it down, creating a lower high. If we can close about it, we'll fill that imbalance, we'll get back up to trade up to here. So I just go from one zone to the next zone, following what the overall trend is. If we're looking for a trend on the 5 minutes, okay, from this high, it's going down. Right there, keep it natural, keep it consistent. We're touching a few bodies in there. We're touching a couple bodies in there. Let's continue with this natural trend line going down. Look how it's still hugging the bodies. We've got that one fake impulse at 7:15 breakout, continuing push down. So we are trending down still, okay? But we are also making some higher highs, higher highs, higher highs. So there's going to be a move. Let's just see what happens, guys, okay? Ricardi, looks good. Very explanatory. Thank you. David, gold was tricky today with dollar dropping at 8.15 and gold was dropping. Yeah, it's not always with volatility. It's difficult to trade. Some days are better than others. Just understand. Try and learn what you're trading. Is it choppy? Reduce your risk. Stay out of it until you get something more confirmed. If you need to take a feeler trade, I often do that. If I'm feeling things out, speculating, I go with something very, very insignificant, very small, so that I'm actually kind of focused on the volume, the candlesticks, the open, high, low, close, and I'm not just focused on my profit and loss and panicking if I'm in some drawdown or you're really analyzing the market at the most optimal time when the COMEX market opens up, when there's high impact news like NFP Friday, 8:30 they release. You don't need to trade right at 8:30, right out of the gate. You can wait 15 minutes. You can wait till 9 a.m. You can wait till 9:30. You can wait till Wall Street opens up, but you can analyze what it did with the news and then see, is there any supports being made? Is there resistance areas? Is there performing double bottoms, double tops? Is there liquidity grabs? Just the kind of back test, go back and then get ready for Wall Street. Wall Street could possibly continue a move that was being created, or it could reverse a move. No, always do a top-down analysis with your higher time frames to, or your higher point of controls to be watching. All of these things, you put all of this together, it's a recipe for success. And then if you can also learn proper risk management, then yeah, that's part of being a successful trader, guys. Order blocks, Ahmed, order blocks. Okay, so order blocks are basically these things. These are order blocks, these boxes. Okay, you see how it came in there, triggered, and went back up, closed above. Came all the way deep down there, liquidated a lot of orders, a lot of pending orders, picked up all that liquidity, and continued to close above here. So then what that's telling me is in the order book, they came down there, they hit a lot of pending orders, they hit maybe stop losses down there, maybe they took out all the longs. If there was buyers here and they had their stop loss down here, they liquidated them and took their money, took their shares or whatever you want to say, whatever you're trading, whatever markets, and then they produced the long move without you. You know what I mean? So it's also learning where to place stop losses, guys. It's also the art of trading, is where to place stop losses. Okay, but let's watch here now because it's 7:55. Okay, we're going to see a little bit of volume. There's going to be some volatility. Maybe some opens are dud. Maybe some opens are very volatile. Again, do you want to buy the first candle that opens up? If you want to do that, then maybe go to the 1 minutes and focus on the 1 minutes. And like look at what the 1 minutes are doing. We'll focus on 1 minutes tomorrow night, guys. So I want to save 1 minute scalping for tomorrow. Today I just want to watch this till 8:30 maximum. Tonight we were supposed to just do a webinar and that's it. We were going to wrap it up. So I'm actually staying a little longer with you guys. If you guys can kindly leave a like on YouTube, subscribe to the channel if you guys like this type of analysis with webinars, with all kinds of stuff. If you guys like this stuff, it gets us excited about what we do here. And then it also shows me that you guys are actually learning. Guys, and let's just talk about the overall markets. And we got 4 more minutes, so what's going on? Let's talk about Right here, I want to talk about our website, guys, stocksnipertrading.com. That blog I was talking about. You come to our website, go to more, go to blog, right over here. Non-farm payroll. What is non-farm payroll? Make sure we understand what is it. What's the purpose? What's the release schedule? Components of the NFP. Do you guys know what all of this is? Importance of it. Economic indicators, market impact, monetary policy, analysis. So that's coming out this Friday morning. For members, guys, you got how to wait patiently for a trade to come to you. We talk about that every single day. Wait patient, allow the trade to come to you. There's a nice thorough breakdown. I'll have a video for you guys this weekend. We'll upload it in our education. What is Bitcoin? Hopefully you guys, I said that there might be news this Friday evening, guys, for Bitcoin. For all of the Bitcoin followers, maybe you guys know what it is, but there should be big noise. There was a big whale in the market that bought 200 million coins right before Trump announced the Bitcoin Federal Reserve, and then kind of dumped it down the next day. So there's a whale in the markets, guys, and you can spot the depth of market. If you got the order book, you can start to see big orders. So it reminds me of old years back when the big whales were coming in and manipulating prices. How to trade a bear market, guys. If you want to join our 6-day boot camp, right over here, join us. We'd love to have you guys. 6 days, Monday to Friday, 3, 4, 5 hours each day with 2 sessions each day with a 20-minute intermission, and also Saturday morning for charting. Just like how we kind of did with USDCAD, we'll do a thorough one on Bitcoin starting from day one, and see how it's moving. Guys, there's a lot of stuff in this blog is what I'm trying to say. It's for free, guys. Free education. Use it. We're 2 minutes away now, or sorry, 90 seconds to be very technical. So what do we see forming? Okay, so I can see a bottom right here. There's a nice bottom. Okay, so I'm just going to place again some zones. Okay, and then what I do is I kind of back test to see, oh, okay, over here, it came in, back up, came in, back up, came in, back up, came in, it held right here. Now look how it's coming down right into it 1 minute before. So what could happen here? The market could do what it did yesterday. It could dump all the way down and fill this imbalance. It could just come down there, make an impulse, grab a wick, and come right back up. So this is where you're going to see volatility. And look at how it's coming down naturally right when the futures market opens up. Do we have another kind of zone? What I can also watch, I want to say right here. Here was some support. Turn to resistance right there. So I'm getting a smaller scalping area. Okay, and then just maybe it's going to produce a double bottom. One bottom came up. Now it's coming down. Will it come right back up? Well, let's watch. Here's the close. 20 seconds. Will it close with the black volume below this zone? Last time it came down there, that's where it got a wick right there at 2,916 and 12 cents. This is an area we should just place that. Let's see if it breaks that low right there. Okay, so here we go. Futures market, 8 p.m. Welcome, guys. Here we go. Okay, so ignited black candle. Pop the wick and drop. Okay, this is very, very similar to yesterday. But look how it just came down, took out the low, got a wick, shot right back up. So let's see, flipping the candle blue. So we got a liquidity grab currently in the first 15 seconds. Now we got a major blue candle coming back up, testing 50% of that black candle. This is where it gets real technical, guys. This is why I tend to lose my voice often, is because I really break down everything and then it gets really crazy on the 1 minutes. Okay, so what do we see so far? We see that they've taken the liquidity below the structural area right there. Guys, do you guys understand this? If you guys are starting to understand this, let me know, because I have no idea what level everyone's at here. Do you guys understand why they did that? I know you guys are just focusing on, Ron, why didn't we buy? Ron, why didn't we sell? This, that. Guys, pay attention to what's going on here, because you're going to start to learn this on a daily basis. Why did they engineer that move? That was an engineered move. They did that for a reason. The market didn't just do that just because. That was engineered. We have market makers who are professional engineers. Just like you might be a mechanical engineer, a computer engineer, a civil engineer, a mathematical engineer. We have finance engineers, stock market engineers. We got market makers who are engineers. They can engineer the move. Okay, so they came down there for a specific reason. They took out the low. Maybe there was stop losses down there. Okay, if you're long, if you're buying, you're probably going to place your stop loss below that wick or below here. So they came down there and they liquidated. If you're high leveraged, like what we talked about, leverage, you got liquidated. You probably would have panicked, maybe. If you're trading too big for your account. Now let's see. It came up here again, right up to that natural looking trend line. We're still below that red zone. So now they're pushing it down. So we've got some open range, big range, and look at the volume. It's coming right back where it opened with half the candle still remaining. Okay, so do we want to trade this candle? Let's wait for it to close. It might be now, forming its bottom. So one bottom, there's the neckline. This could be the second bottom coming up. Let's see if we get some good closing volume. Maybe we can buy a pullback. Like all of these things. Let's just wait for this candle to close, if anything. Okay. When in doubt, wait it out. Any questions, guys? Sergio, liquidity sweep. But let's see if it holds. Okay. But we also got to know too, another thing is don't just focus on liquidity sweeps and think all of a sudden bullish, because you have to also understand technical moves. It made a lower low. It took out that low. It created a new low. So if we keep having lower highs coming down, then we could be trending down. Okay. So just keep that in mind too. It could be either or, you know what I mean? We gotta be open with ourselves to understand that it's not just one situation. Just because they grab liquidity doesn't mean that it's going to go bullish all the time. Okay? The candle close will dictate confirmation. But do you guys see like the double bottom that my eyes see, or do you guys need to start to smoke some weed like me? Like, I don't know what it is. Like, you guys tell me, are you guys smoking weed? Are you guys not smoking weed? What is it? When I smoke weed, the candles are talking to me. They're talking to me. In Canada, as opposed to the US, we have legalized weed over here. So I love Americans, but what if we tariffed a little bit of weed coming to you guys? You guys wouldn't be happy about that. So, I can talk about marijuana here. It's perfectly legal. Mohammed, you're weed free. That's good, bro. Not me. I use it for medicine. Medicinal reasons. Okay, so let's look now. We got 20 seconds. Now, will this volume engulf that black bar? Now, this is where I kind of like zoom in at this structure, okay? So we know how high it went, we know how low it went, we know how it opened, and let's figure out where it will close. Will it close above like approximately 50% of that black candle? Here's the close. 2 seconds, close. So they did close above. Next candle opened ignited black, bearish, pushing down. Okay, is this enough that we can start a trade right now? We're still inside, like between this zone, red zone, and this green zone. We're still trading inside here. You can look to entertain a trade, but I would still maybe wait for a little more, just a little more development. We could barcode, it could go down black, come up blue, go back down black. What if it closes black below there then? Then, what I was saying, Sergio, how it already created that lower low? Then if it closes black below there, then it might be actually a bearish move pushing down. And then it's not just like a liquidity grab to move up. Sergio, that's a good question. I got to be careful on YouTube. Not for our YouTube members, but just for YouTube. If I say something, could get a strike. We don't want strikes. We already went through that. We're being good here at SST. We don't want any more strikes from YouTube. I know we talk a lot about the live financial markets. We do say a few funny things. but we gotta be professional here. Okay, so what's going on, guys? We're like, continue. Like, we can have fun here, but we still got to be focused, and then we got to get back to business. So look at how it opened. It was like an ignited bearish candle on the open, and look at it. Now we're engulfing. So that's what I mean. If you kind of bought that, you're trading inside this zone. So let's wait it out. Now, is this coming down? Will it be a higher low? Will it make a lower low? Will it close below this zone? Will we be able to, in fact, make this a red zone, and maybe we're going to sell back down, further down? Maybe it wants to come back down and test 29.14 down in here, that daily point of interest. Maybe this green box wants to continue to push down. However, it may come back up and close inside here. So we're barcoding. It's black, blue, black. There's some range. So it came down there. The buyers are buying it right back up. Will it close? How will it close? Where will it close? All of these things we still have now 2.5 minutes to go. We're still in that bearish trend. Okay, remember, the trend is your friend. We haven't even broke above that trend line, so still naturally we're pushing down. Okay, you don't need to fight the trend. That's another thing. You don't need to fight the trend. This is RSI, relative strength indicator. Okay, I'll be talking more about indicators on the calls now too, because now I believe that you guys are getting more comfortable with price action. You guys are learning this stuff. You guys are getting really good at it. Now I can start to complement our charts with indicators. We have a 9 EMA 200. We can use one day MACD. We can use stochastics. We can use RSI. We can use all types of indicators, whatever you guys want. But I want you guys to really learn price action first, and then we'll learn indicators. I believe that this is more important than any indicator. Indicators are lagging. They're nice, but this is real time. This is real analysis. Okay, so we got now 1 more minute left. Let's see if that black volume will close below here. If not, if it comes back up, then we see it produce a higher low wick, and then maybe we still don't have any black volume closing below there. Then the next candle could go blue and come back up. Then we'll be, naturally barcoding black, blue, black, blue. That would be making in 4 bars its own double bottom, where it comes down black, goes up blue, comes down black, and it maybe goes up blue. Okay, so look at now how the candle is. The buyers are pushing it up right into the close with 25 seconds to go. Look at this. They might actually flip the bar and turn it blue. Remember when it opened, it just had that wick at the high end, and they dropped it all the way down. We got a good response by the buyers down there. Here's the close. We might still close with that black head over here, and then that's like more of a hanging man candle. If we still have this black volume, maybe look at where it might want to close. It's closing right at the green box. There's our ignited blue candle. Okay, so it just kind of opened with the momentum. Here's that double bottom, what I was talking about. Black, blue, black, blue. Okay, but see how it came up again? And they're pushing it down. That's a lower high, lower high, lower high. We're still below the trend line. They've kind of exhausted all of that momentum right when it opened, and now we have a bearish shooting star that just showed its face. Now it's coming back up. So again, do we want to trade in here, or do we continue to wait? We're still barcoding. Okay, we still don't have any clear direction yet. We have both sides that are still building at a critical area. We are at the apex. Okay, this is called the apex, where the descending triangle meets demand or support. See how the triangle, so we are either going to have a breakout to the upside, or we're going to come back down. Okay, so, some of you guys are saying, well, Ron, why are we not trading? Why are we not? Sometimes this is trading. Trading is not always just hitting your buy and sell button, okay? Trading is actually analyzing, believe it or not, guys. I know it might be foreign to some of you guys because you guys do not analyze. You just go in with what your neighbor tells you, and you just hope for the best. That's not trading. This is trading. Even when you're not hitting a buy and sell button, we're still analyzing, getting ready, preparation to take a trade. This is the hard part. is deciding what you're going to do. But sometimes you need more information from the markets to tell you what to do. Look at this now. Okay, so we got a strong bullish answer. So then when I look at this now, they did get some good liquidity. Now we're coming all the way back up. Okay, where will this body close? If we're not in it right now, it is an impulse candle that just broke the trend, impulse candle that just broke this resistance. Will it close with this type of momentum in 3 more minutes? Will it get pushed back down? Where will it close? This is a good candle now to determine. But do you see now, when you see a double bottom now, maybe more it's visual now. Maybe you guys can learn. Maybe if you get the confidence to do this now, when you're learning, okay, there's the second bottom. It's got the nice bigger volume based leg. Now when we put the pieces to the puzzle together, they did grab the liquidity. No black close below there. You had 4 bars that did their own double bottom where it came down, one move down, one move up, one move down, and then this is the double bottom with 4 bars. You can really break down the individual candlesticks if you like, to do stuff like that. That's when you want to start scalping 1 minutes. You should understand bar by bar what their characteristics are and how they can make patterns. But look now we have 2 more minutes to go. So it did break all the way up there, and they pushed it right back down. So again, where will this volume close relative to this? Is it going to close right at this neckline? Will they close it back down below? Are we gonna determine where 50% of this big body candle is? So you were asking about like volume. Okay, so you see that this candle had a lot of volume. If it closes with a majority of blue volume, we're going to figure out where exactly 50% of it is. Maybe we might buy a pullback if it comes down to us. Is this analysis helping you guys? Are you starting to get better at this? This is good practice too, good review, good review. Live review is the best review in my opinion. But you can also backtest live candles. Like, see how I'm backtesting with you guys? I'm telling you like what just happened there. You know, that's considered to be backtesting, but we're doing it in a live environment. Okay, so we have 60 seconds to go. What do you guys think? Do you guys think gold is going to continue to go bullish, or do you think it will sell back down? If what is your analysis right now? Like right now, are you bullish or bearish? And then also pay attention to the last 30 seconds to the best of your ability that you guys can, because the last 30 seconds shows who has momentum going into the close of this bar. Okay, first thing I'm doing is I'm getting ready to possibly locate where about 50% of it is. Okay, and I will adjust it upon the close of the candle. So I'm just getting my zone ready. Will it close above here? Then I got to flip this red one green, because you know it could retest this and start going up. It could come down. Let's see, maybe a pullback buy would be better inside here. Here's the close. So it looks like it closed above. So I got it. You know, sometimes candles open up too fast. But what I did was figure out right there. Okay, so you see how it came up? It didn't take out the high wick, got rejected, came retested this zone now. If it cannot hold that zone, I'm looking right there about 50% in here. Okay, so right now it's kind of spin top consolidating at the top of the zone. Okay, so it's still spin top consolidating. If it does want to break out, wants to fill these wicks, take out these bodies right here and fill that wick and come up to this 2920 essentially. So that would be about 15-20 pips from up here. Okay, but let's see if, okay, now it's coming down with more black volume. Okay, sellers are present. Will it break this green box and trade right here? Because you see now how we closed above that trend line. There's the trend line, and the trend line, if it comes down to support it, maybe the trend line will act as support in this green zone. It might be better to buy inside here than up here right now. We still have a spin top candle. Remember what we were saying about the volume and the indecision. These are sometimes not the best candles to buy or to sell. If you want to kind of add a 9 EMA Okay, so you see where the 9 EMA is conveniently located too? Right at that trend line and right in our green box. So, some of you guys trade the EMAs. Maybe it needs to come down there and retest that EMA, the box, the trend line. That might give us enough confirmations that we need to maybe possibly buy in here at 2917.50. If it does come back down to us. It might not come back down to us right now or the next bar. It might take 15 minutes, might take 30 minutes, it might take an hour. But if we continue to stretch these zones in the future and just kind of wait for it. Okay, so again, it came up, but that volume is still pushing this down. Will it break its own low and drop a little further? We have 2.5 minutes to go. And then if you want a better picture of the first 15 minutes of futures market, you can go to your 15-minute candle now because it is 8:17. So a first 15-minute candle formed. It opened. Remember when it dropped down and then it came back up to the opening price. It came and it engulfed almost two of those last 15-minute candles. That was the high. So the high got up to those 15-minute bodies right there, and then they pushed it down. So this is what we got going on right now in the 15s. Like that's where I want to maybe buy on the 5 minutes, right in that little fair value zone in there. If it can come down there, if it can hold, who knows? Maybe we'll see. It's still trading right here. Maybe it just consolidates right up here and next bar is blue, and then maybe I look to buy that and take it up. I'll judge where it closes. And this is the overall. Okay, so remember too, if you're looking for buys, still have a lot of resistance like above. Okay, so if we're buying, we're still counter trading. Just want to make that clear to everybody. Oh, and the 200 EMA, sorry. The 200 EMA was right here. We're held at 625. See where we broke it a few times. So we're still holding above the 200 EMA. We're currently above the 9 EMA. And the candle is going to close in 50 seconds. And to me, it's still indecision. It's still currently a spin top with thin volume. Remember our previous bar, how much nice volume it had? What happened to the volume? Why did it die off? So this is where the market is catching its breath right now. It had a big move. It exerted a lot of energy to do that big move like that. So now maybe it needs to just catch its breath before it can either continue to make its move to the upside, or sellers are just going to come in and spoil the party and push this thing back down. Is anyone in a trade right now? Then I can help analyze on both sides. Let me know if you're selling, if you're buying, if you want to. I tend to analyze both sides, but if I know that you're in a trade, did you see that, guys? It opened blue, ignited, came up, and then they spiked it back down. Okay, so there's lots of resistance up here, but when it comes down, the candle body was still filling. It came up again, and again they spiked it back down. Okay, so that's telling me that there's a lot of resistance up here. This is where they could flip this candle black and start to come down. Okay, maybe they pinned it right there. They pinned it, and maybe they're going to push it down. So remember what I was saying. Maybe we patiently wait to see what will happen if it comes down in this zone. Sultan, you're waiting. There's nothing wrong with waiting. Okay, patience is good in trading. Patience and discipline. Patience is a virtue. Sometimes it's better to be patient and wait for a trade than to just act on a trade and trade impulsively. Consistently over time, like if I talk months, years down the road, if you're trading on like with impulse, you're not going to do as well down the road, long term. But if you're trading with good risk management, you're trading with high probability setups, you're waiting for the trade to naturally come to you, I guarantee you over time we have this conversation, you're doing much better than the trader who was impulsively trading, if they still exist after a couple months or years in the markets. Okay, so we are building. It's building back up. Okay, coming up, pushing down. These are those tricky candles. Like, do we buy it now? It's been holding this block, but then we see 3 big rejections. So these are always those tough situations. This is why I'm always talking to myself when I trade. I'm always talking to myself, like how I'm doing with you guys. I do play by play in my head. Maybe I'm not talking to the computer, but I'm doing play by play in my head. So you see how it came up again, and then they slammed it back down. So it's just showing me that there's a lot of resistance. Maybe the risk to reward, it would be better if I can get a buy down in here on discount than just buy these highs, because yes, it could break out a little bit and then they could slam it back down like they did on this wick right here. So for me, I would feel more comfortable buying in here. Unless this candle closes with good volume and I can maybe catch a pullback on this body. Maybe, like, I look at the time too, it's 8:22. Maybe I got to wait till 8:30 to entertain a trade. Wait till that next 30-minute bar. I don't know. Let's just continue to see what happens here. Okay, so have you guys like followed the volume? How many times it came up there? Look at it again. They rejected it again. Every time it comes down to the green box, it picks up those buyers, comes back up. But we've been rejected. So we have to be careful here. Again, now they producing a pin bar, a shooting star candle. So this thing, now we have the last 30 seconds. Let's see how it's going to close. Who has momentum? Right now, sellers are in control of this candle, I would say. A good majority of the control. But near the close, and the close will determine who, in fact, closes us. We've got still, see that buying volume? It's still there. It hasn't really broke this green box yet. Are you guys still bullish who said bullish? Are you guys still bearish who said bearish? Traders who are undecided, are you guys still undecided, or are you leaning towards a position? I'm leaning towards watching the last 25 seconds right now because they pinned it back down. Are they gonna close it black? Are they going to close it with a little blue? Remember, next candle, look at the size of the wick. If it comes back up blue, it's got to go up blue, 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 all the way up those wicks. And maybe it might break out a little more, but then it might slam it down. So that's why I'm waiting to maybe purchase at discount inside here or even down here. That's what I mean. The risk to reward. Okay, so we closed inside the box black. So sellers confirmed that they closed. Here's our bullish ignited candle opening in the green box. Again, it came up, got rejected again. Will they push this thing down? Okay, and pay attention to, remember the ignited open. Okay, there, it just lost the ignited open. You can see it turn black. So we just lost that ignited open. So all the sellers have to do is just break that wick and break that wick just a little more. And then we come down and we trade. There's your 9 EMA, like 50% right in between the zone. And then there's our bigger fair value, bullish fair value on the big candle that started at 810. Okay. Okay, there's again, see how it's still holding. It's still holding. The buyers are still considerable strong in the zone right here. It's not really breaking down, but again, they push it up and they get pushed down. So there's no real follow through yet. Every time they get pushed, they come up, they get pushed down. This is a good strong candle now. Okay, so maybe if this one closes strong, maybe you can buy like a retest off of this candle. Okay, so again, I'm going to allow it to close because we're getting really close to 830. Look at that massive rejection again. It didn't produce a higher high. Okay, so lower high. This thing going into 830, if they close it down here black, this could sell off going into 830. Stacy, welcome. How are you? Okay, and I can only stay till 8:35 tonight, guys. I was only supposed to get that webinar done and go do some other things, but having a lot of fun in Tokyo. You guys are here. You guys are supporting the channel. You guys are liking and subscribing. So we're just watching. Tomorrow we'll do some 1 minute scalping and analysis on gold, walking in, leading into the futures market. Look at what we got. The big rejection. Okay, so are we going to lose this body of this candle? 2.5 minutes to go, and then we're going into 8:30 p.m. What are we thinking? 2 more minutes to go. So do you guys see like the neckline right here that it's trying to break? Like right here where you got a lot of bodies right here. Body, a body, a body, a body. That wick right there, 2,919. That level right there. Sadakov, when you are waiting, you always stress. There's nothing to be stressed about, especially if you're not even in a trade and you're just waiting. Why are you stressed? You should be excited and not stressed and watching what's going on in the markets. This is where you should be stress free, especially when you're not in a trade. Traders tend to get stressed out when they take a trade, not when they're not in a trade. So we got some work to do. We got to work on that. Okay, so here's the close. Remember, I'm paying attention to the last 30 seconds right now. And this was kind of like the minor neckline. This is the bigger neckline. Okay, so this is where, you got to be very careful right here. This is the bigger neckline. And we're going into 8:30. So we got a really nice bullish candle. Can we identify where is about 50% of that? Right there. Okay, so we opened bullish ignited again. It can possibly take out, but that was where we had that huge rejection right there. Okay, so let's see how high it can come up here. If you're in buys, okay, I didn't say to buy, but if you are in buys, this is where if I was in a buy anywhere along this trend, I would be taking my stop loss to break even right now. I would be reducing my risk. I would be maybe scaling out just a little bit, to reward yourself for that move if you took a buy. Yeah, you can bank more if it continues to drive, but we also have to acknowledge that there is some supplier above us. And then this is that big neckline what I was talking about, guys. So I know I'm only going to be on the call for a few more minutes, but if you're going to continue trading tonight, see the first bottom right there. This is the big neckline right here. There's that second bottom, and then this is where we're breaking out. But this is the big neckline. This is where, if you close above here and retest this or this, each one of these zones that are already now marked up as, if I'm buying a pullback, maybe right here. If this one doesn't hold, I'm looking right here. This is the big one this is the fair value gap in here. If I can get a buy in here, that would be the best. If you can get a buy down there, that would be really ideal. So you can see the discounts that you're getting. Each one of these provides discount opportunities. And just try and learn how to catch a pullback. You might surprise yourself by catching a pullback trade. And then this is another thing, guys. FOMO, fear of missing out. I know I missed out on this. I'm admitting to everybody live, I missed out on a good buy off the second bottom. But now that I've missed out, does that give me the right to now just buy up here because now I missed out and I'm mad and I'm stressed out? No. This is where you have to be extra disciplined to maybe place an alert in here, and then eventually, maybe later tonight at some point, the volume will come there. And then if it comes down there, I'll be alerted, and maybe I can buy off of that block. If that one doesn't hold, I can buy off of this one. Okay. Do I want to buy the highs? Not necessarily. Like, because I know there was good buyers right there, good buyers right there, buyers here. Like, how much more is there to the upside of this? But guys, I was just analyzing tonight to show you guys. We were mainly focused on our webinar tonight on what is the US dollar Canadian dollar pair. I just wanted to show you guys how we can utilize zones from yesterday's where I didn't do a top down. Tomorrow we'll start fresh with a brand new top down analysis. We'll bring it down to the single minutes tomorrow night, guys. We'll have a lot of fun tomorrow. Right after this candle closes, okay, so it came in there in that supply, they're pushing it down. Now, will it close above this zone or will it close below the zone? This is what we have to watch, because remember, this was that bigger neckline. Then if they push it all the way back down and close it below there, then there might not be any volume that closes above there. And it looks maybe basically like this candle right here. Okay, so we have 55 seconds watching into the close. Wow, Anton, you're in a buy from 29.16 right here on that. It doesn't get any better than that. So congratulations. Like, that was the best opportunity where they grabbed the liquidity, and that's a good buy. I'm gonna say it's like an A+ setup. You waited for the second bottom. You got the liquidity grab. It doesn't get any better than that. Congratulations. I wish you told me. I would have. If you told me, Anton, maybe I would have bought with you. Tell me next time. Sometimes when I'm explaining concepts, I'm so into explaining what's happening. Sometimes I don't take trades unless I set my mind that we're trading. Like, I can be aggressive, guys. There'll be a lot of trading we'll do, but I want you guys to learn this because there's other things I want to talk about. So what I just did there, that body confirmed to me that it closed above that red box, and it could continue to go, but it could pull back right into here. So again, sometimes you just got to wait for the pullback, either here, 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 or here. So this could be like S1, support 1. This is S2, support 2. This is your S3. And then this is the bigger bottom. If gold comes back down to 29.16, might be a good opportunity to buy. So we got a really nice double bottom breaking out. It's a beautiful move. Wow. Guys, maybe I'm a little cautious on trading these Tokyo sessions because I haven't traded gold in Tokyo in a while. So maybe I just need to get accustomed to how the volume is moving, and then we'll get right back to trading this stuff. But it's been incredible, the volume the last few days. There's nothing to say. Like, this is not choppy. This is not erratic. This is very clean. Like, let's now review this. Like, look at how visually appealing it is. Let me get rid of these EMAs so we can actually take a look at and appreciate like how volume is trading. Look at that nice easy double bottom. Now you see that they grabbed the liquidity and it naturally made a move and continued to move through here. Okay, that's the highest point it came to, right up there, 29.23. That's when they slammed it all the way back down. So if you want another zone above you, if you're going to trade later tonight, I would place a zone right there and see what happens if it gets up to 29.23. Okay, so there's your next block. There's your bigger one. And then what you can do throughout the entire night, throughout tomorrow, is just trade in between these zones. Like if it sells back down from here down to the green one, sometimes I just measure what it is exactly, just to come down to there. That's it. That's about 10 pips. Right down to there, 10. If it goes down to there, you're looking at 18. If it can come down there, that could be 23, 25 pips. And then if I'm in a short position, I might be closing it out there because I know that that's at fair value where the buyers are waiting. So I could close my position, sell high, buy back low, buy back, and then bounce it back up. I could get 20, 25 pips coming down, maybe 10, 15, 20, 25 on the next move. You know, you can just scalp in between these areas, guys. It's moving really nice tonight, and for the most part this entire week. I would love this. If gold can continue to do this in Tokyo, this is amazing. Then we can get into some more Tokyo trading sessions. Tokyo are always usually hit or miss, but if it's trading like this is trading better than like COMEX sometimes. Noel, you should have bought. Those are those woulda, shoulda, couldas. You know, like understand as a trader, sometimes it happens. You know, but learn from this. Next time, then, if you identify this pattern, then you should buy. Then do it. You know, if you see this pattern, double bottom, second bottom, they grab liquidity. Maybe on this blue candle, where I would explain to you where it's black, blue, black, blue. Those 4 bars made a double bottom in itself. So if you guys don't see what I'm seeing, where it came down, it went back up, and it came down, and that's when it went back up. And where did it do that? It did it at this key critical demand area, and then you also have a piece of the puzzle that grabbed the liquidity. So putting all those together, now where you say you should have done this, you would have done that, you could have done that, make this a mental memory, like a snapshot in your head of this pattern, and maybe test it out tomorrow, test it out later tonight, test it out next week. I guarantee you'll see this pattern again over and over and over, and then maybe you'll get the confidence to take it now that you see it. Okay, but I want to make it clear, it doesn't always do this. Okay, so sometimes it does this, where they fake us out, comes down, goes back up, comes down. As it's coming up here, this is where they could have slammed it back down. You know, like so. But tonight's moving real clean. Really nice. Okay, but guys, that's it for me. Join our free Telegram channel. It's pinned at the top of YouTube. Join our YouTube sessions, guys. We have our 6-day introduction to cryptocurrency and Bitcoin bootcamp. I don't think you want to miss out on this because this is when crypto is gonna start moving. You know, it's gonna get exciting. It's gonna be in the news. Maybe you want to learn about this. It's a 5 full days of theory, and those will be 3, 4, 5 hours each with intermission. Then we have a 6-day on the charts on the Saturday morning. You get included also a 3-month membership with us, exclusive membership at SST with this bootcamp, that you can be part of the Discord community. You can be having all the trade ideas and setups sent to you. You can have all of the education we have at SST, and all of the live trading with Dave and myself. So if you'd like to join, we'd love to have you guys. If you guys are continuing to enjoy the trade setups, the trade ideas, you know, like just continue following, be patient, be disciplined. That's what Dave and I are trying to teach here, is sometimes waiting for trades is okay. You don't always have to rush into trades. Okay, guys, so wow. And then now just continue. Like this big red zone, that body just confirmed to me that it closed above. Okay, so what I do is just continue with this type of, and then inside here in the green box, 50% of that big green candle, I can see how it's located at a body, like right here. This is where I could see the market coming in, maybe consolidating down in here, right in there. 50% of that big green candle, and you're also 50% now in that big green zone now. So things are really moving. This is where you might have a double top. Like look at now, this is where you can look at your RSI. It's approaching 70. We're getting up to the previous high where they dropped it. Now we're rotating all the way back up. So this is where there's going to be lots of liquidity right above that red box, right up here. There's a lot of liquidity up here. This is where if you're looking to maybe sell, I would watch to see, will it come up here and get rejected and do something like this? I'd be looking for maybe a possible sell position. If you get the liquidity grab, just like you had over here on the buy side, you could have the opposite on the sell side. What happens if they impulsively break a blue candle out of here and then it gets a wick and comes back down, retest this? Then you look for maybe a possible sell to short it back down. Now you got confirmation that they grabbed the liquidity, closed it below, retest this, then there's your drop. You could have like an M top, double top. This is a double top with lower high. You had very similar down here, liquidity, second bottom, move up. You could have the opposite pattern happen now for sellers. So just pay attention to that, guys, if you're going to continue trading. But I got to get out of here. I had a blast. Everyone, please like and subscribe to the channel and visit us tomorrow. Join us tomorrow, 7 p.m. We're going to go top down on gold. Maybe we'll do another security. You guys let me know what you guys want tomorrow. We'll do 2 securities. We'll bring it down to the 1 minute and we'll actually do some 1 minute scalping, 1 minute analysis. All of these bars you'll learn faster tomorrow because there will be a new candle that opens up every 60 seconds and I'll continue to analyze it with you guys. If you guys ask questions, I can answer you right away while it's happening because we got to be fast because we got another candle opening up in another minute. And you learn faster that way, guys. Okay. Wow, Anton running 65 pips. Congratulations, man. That's amazing, guys. Good job. Good job, guys. Everyone on Zoom, have a good night. We'll see you guys. And everyone on YouTube, we'll see you guys tomorrow. Have a good day. Trade careful tomorrow. Make sure you look at your Forex Factory. Make sure you look at your earnings. See who, if there's any big news, see who's reporting earnings tomorrow. Look at your news, what time of day, and all of this, and trade with proper risk management, guys. We'll see you tomorrow. Wow, what a move. Coming right up to there. Have a good night, guys. Thank you.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.